I think this will probably be shared in the DAO context afterwards. How I would like to run through is we have a couple of slides prepared, guide through, ask you to collect the questions until the end. Whenever you have a question, feel free to send them to the chat. We'll try to do our best to collect them on the side and then answer all of them at the end of the slide deck. Yeah, with that, happy to jump in. And as always, feel free to note down any critical points also that you have. We're here really to hammer out the last details. Quick intro before jumping in. I'm Bernard, part of the Areta team. We're basically working on projects like these. So for different DeFi DAOs in capital allocation, where we typically come in and design and run those initiatives. We're part of a larger professional services firm that also does strategy work for protocols on the financial transaction side, and sometimes also overlap on larger mandates. But yeah, full stop here. Second part of the team is Nick and Matt from the Factory Labs team. If you quickly want to say hi, and then we can jump in.
Yeah, sure. Hi, everyone. My name's Nick. I'm the CEO of Factory Labs, which is a London-based research and development company focused on kind of token economics infrastructure and governance infrastructure. So yeah, we've been building DAO-based stuff for the last few years, and we're now sort of focusing on building infrastructure for DAOs such as ZKsync, and in particular focused on governance-related activity and incentive program activity. So this is a kind of example of the kind of stuff that we're highly focused on this year.
Awesome. With that, happy to jump into it. Some of you will remember the slides from a short presentation we had last time. So basically, what we want to get across is the tagline. So what we're really doing here is building the TPP for app layer growth. We see that there are two key drivers to grow users on Elastic Chain. One is liquidity, that is targeted at making the ecosystem usable, if you will. Is right now targeted by Ignite, as we all know, which uses liquidity incentives to bootstrap that activity. We are now moving from that initial focus to the app ecosystem, where we are now looking into, okay, what does it mean to make users stick and increase the awareness on the Elastic Chain ecosystem. This is how we currently see it. We had a evolution from our last presentation, where we now, with finalizing the last feedback, advanced the focus of our funding slightly. So this we want to guide through first, and then jump into the details on how it all fits together.
Yeah, so I'll quickly fill you in on the sort of mild modification that we've had from the initial posting of the proposal. You might have seen the update in the forum, but I'll quickly overview it. In the sort of first iteration of this, we wanted to essentially onboard the ZK chains in 2 waves. So this is a kind of example of the first wave. We might bring on 3 ZK chains in the first batch, and then we would ask those chains to pick a number of their flagship apps. So they might pick 3, 4, 2, whatever it might be, and then we track those individual applications and kind of unlock funds to those applications. Based on a bit of feedback we've had from both Matter Labs, the association, delegates, and talking to the ZK chains themselves, we've kind of discovered that a lot of them are actually already quite focused on the app layer, which is great, and in fact are already building their own growth programs. So for example, Abstract has Abstract XP, which is a really advanced program, and it starts to make more sense that actually we can get slightly broader impact by working with chains and integrating with their growth programs. So Catalyst now has a function of essentially catalyzing their growth programs and incentivizing the creation of new ones. So essentially what we're trying to do is structurally create the context across the Elastic Chain that gets us the most apps, right? So what we want to do is have as many apps as possible. So this will give us a focus of not necessarily isolating just a few apps per ecosystem. For Abstract has over 100 apps. this will allow us to structurally support the growth of apps at the ecosystem level. And it also makes things slightly neater because we can integrate into existing infrastructure and support them. So essentially, Catalyst will now plug into growth programs run by the ZK chains. And with that, we can then feed the insights, knowledge, and data back up to a kind of meta level. So Catalyst will essentially look like a kind of growth program of growth programs where we can show users entering the ecosystem what growth programs are active. But we can also make those growth programs better by working as a kind of enhancement layer. So we can see what's working from the individual growth programs across the ecosystem and bring insights and optimizations back up. So now the program has a kind of ecosystem level view. And ultimately, by aggregating the information and knowledge and insights we get from all the different growth programs, we can get a whole elastic chain view and get a really good look at how the growth programs are working on there. So yeah, do you want to do the next slide, Bernard? So essentially what we're trying to do is, those of you who read my post will know the kind of sort of angle we're sort of getting at this. Blockchains are networks. The value of these networks is a function of the users that are operating on them. I sort of talk about, Metcalfe's law was a bit of a, dial-up modem sort of view of how this works. In reality, blockchains have incentive structures. They have tokens. They also have symbols, and all of these other bits of complexity that are in there. What we're trying to do is catalyze the growth of the entire Elastic chain as much as possible by creating these structural incentives. So there is a growth rate that we can optimize by applying ZK tokens to it. So we want to find the best bang for the buck per ZK token on network growth. That's our kind of key KPI for this. And we're doing that by integrating with growth programs across the entire Elastic chain. You're muted, Bernard.
Yeah, thanks. With that focus, this is basically now targeting two different levels, right? One, as Nick now described, ZK chains and their growth programs are the key element for us to allocate tokens to. So this you can see here, we will allocate tokens to the growth programs. They will apply for a specific allocation, and they will then distribute those to users and app builders that are participants of their specific program. What we really want to do there is we have the ZK chains, one in the driver's seat, but then also, with skin in the game for the whole program. This is split into two pieces. The first piece is an upfront allocation for a range of selected apps. This is targeted basically just to solve the app founder problem of early stage capital. These will be smaller in size, and then the large share is really in the integration with their growth programs and will tie into the mechanism that each ZK chain has developed for their individual ecosystem. The second part, what we call now Catalyst in parallel, is one, we have a VC funding matching allocation that we described last time already. That is really an effort to match apps that have raised VC funding from a list of prioritized VCs to get another funding matching allocation from the program. And this is there to, one, obviously align incentives from VCs to app builders, give an additional incentive to raise from a bunch of selected VCs. And in the end, it's a risk-free allocation stream, if you will, for the token assembly, because this will only be matched if apps are raising from these top VCs. The last part of the service of Catalyst, basically to app builders, is what we call distribution here, app discovery. What we mean by that is we want to enable the apps that are performing well to get more eyeballs on them. We will work with basically additional discovery channels that are, one, on the ecosystem pages, secondly, on a website that we will host where the dashboard of the whole program is around and so on, and then with an additional marketing partner to increase awareness around the program and the app use cases. Because what we feel obviously right now is momentum. A lot of the chains are launching as we speak. A lot of the apps are in very early stages. we want to also use the market momentum to, channel awareness to where it's needed right now. The part that I already alluded to is with that mechanism now, we basically get ZK-chains to have skin in the game. And this is important on many different levels. Obviously, one is we want to work together with them as their lead in what is most relevant and what is most important for the ecosystem in terms of user and app builder growth. But then also in terms of capital allocation, it solves the problem of not wasting funds. How we think about it is specifically with this tagline: the more ZK-chains commit to growing user activity via their growth programs, the more we will commit to them as a token assembly overall, right? And if you basically abstract it away, it purely aligns incentives of the capital that we allocate via this program, and will match the chance of getting a larger allocation with also what you're willing to commit as an ecosystem. What does it mean for participants? And this is just now, you heard all the theory. A lot of it, a lot of the stuff is obviously to unpack still. On a very easy level for those two key stakeholders that we're addressing with the program, right? ZK-chains, as we mentioned, are the key decision makers. So we really collaborate with them and also follow their guidance to some extent in terms of what is their growth program, what is the target. And they can then apply to the Catalyst program with a detailed plan. And that plan then includes, one, what is the strategy for the growth program? So what are they actually targeting with it and why? What is the allocation that they're asking for in relation to the size? And then also, what are the KPIs that they use inside of their growth program? What we will then do together with the review committee that we have is looking at all the applications on a kind of benchmark level, if you will, right? So it's obviously not comparing apples to apples, but what we want to derive on is, okay, I have a somewhat formula on what the size of token allocations are per growth program, depending on the amounts the respective ZK-chain is willing to commit. The second angle of this, or second other side of the coin, are obviously the apps and app builders. These are now the benefits that app builders get from the program. One is the upfront token allocation that we described already. This is basically nominated by the ZK-chain. So a ZK-chain will say these 3 to 5 apps I think are in the biggest need, or will have the biggest value upside from getting early stage capital support, and they will then be nominated for token allocation. The core part then are the token rewards that are attached to the growth program, and the distribution support, which is basically us and the marketing partner plugging those apps into additional discovery channels. The fourth one, and that we already also discussed, is the VC matching component, where we basically want to get VCs closer to the ecosystem and incentivize app builders to look at this prioritized list.
Okay, so I think thinking about why do we need this now is really important. So obviously, I think you've all seen what's happening in crypto at the moment, right? This is a bit of a golden moment that we have. Everything's getting hyper competitive. Crypto is going to be talked about throughout the year extensively everywhere. We've got ZK chains launching as we speak. There's a sort of magic moment to really put fuel on the fire right now. So the goal of this program is explicitly, how do we make the ZK Elastic chain the place where apps happen, right? So that then becomes a race. It's a race for attention, it's a race for builders, and it's a race for users. And the goal is to kind of structurally use this capital to give the Elastic chain and all its ZK chains and all its apps the best possible chance to compete in that environment. And also to sort of close this gap for the obvious need to structurally support apps. We don't have enough apps in crypto, and really the goal of this program is to kind of break that incentive structure and put the fuel on the fire, so we get a whole kind of rush of new apps into the ecosystem. So from our side, bit of technical stuff. Can you do the next slide for us, Bernard? Core mechanics. We're obviously focused on automation. Automation is where we think we're going to get this kind of hyper efficiency we're looking out of DAOs. I think we're about to end into a new era of DAOs. I think a lot of learning has happened over the last few years. Sentiment of them is kind of like in the pits, but I think this is going to turn around when we find new automated mechanisms for making them work effectively. And that's largely what we're trying to do here. So we've got quite an interesting ecosystem here. We've got these, it's a chain of chains. There is clusters of network activity. The kind of network topology is like clusters of hubs, which form the ZK chains. We want to kind of create some infrastructure at the meta level, which will improve the performance of incentive programs and growth for apps across the entire Elastic chain. One of the ways we think we're going to do that is to bring up the data from each of these individual ZK chains into a place where the whole ecosystem can interrogate it. So we're calling this the ZK Data Commons. And largely this is bringing up sort of chain level and both app level information to a place where it can be used and ingested, so into things where it can be used for Oracle-based automation. This is going to drive us transparency and efficiency. So you might have seen plenty of sort of points programs, incentive programs, growth programs happening over crypto over the last year. You've probably seen some of them work exceptionally well, like Hyperliquid was sort of probably the gold standard at the moment. Some of them are a complete disaster. What we're trying to do is create the infrastructure that makes them work more effectively across the entire Elastic Chain ecosystem. So there's practices, knowledge, data, infrastructure, whatever the Elastic Chain needs in order to create good growth strategies and good automation strategies empowered by the sort of ZK Nation. That's what we're trying to build. We also trying to build in, big thing we're focused on is kind of collective intelligence. How do we best build in good decision making into this system? So we've got an expert steer co. I'm going to touch a little bit on farming and Sybil in the next strategy, which I know is a common feedback point that we've had, but also integrating the kind of due diligence expertise that VCs have. We're trying to integrate that intelligence into the sort of systemic nature and have a overarching structure to the Elastic Chain, which supports the growth of applications. In order to do this, you might have read my previous post on kind of cybernetic approaches to organizations. Iteration is at the core. So this is not a one-shot deal. We set this up and walk away. This is an iterative process that extends throughout a 12 to 18-month period where we're constantly dialing it in. So what is the best data that leads to the best growth outcomes? What is the best automation strategies that gets us the most efficient capital allocation? What do the apps need and how can we support it? And looking at the best KPIs that make the best growth programs. So this is an iterative process. There'll be constant feedback to the DAO, and we'll be essentially continually dialing all this in an iterative fashion. And with that, we're doing this in this kind of like iterative waves process. One of the things that we've had consistent feedback on is obviously gaming. So actually one of the key moves that we've had towards integrating into the actual chain level growth programs really changes the incentive dynamic of teams, potentially like apps sibling their own apps to get the unlocks. Now this would be effectively the case of ZK chains sibling their own growth programs to get these incentives. It sort of changes the incentive dynamic and reduces the negative outcome, which is we've created an unlock mechanism, an app has sibbled it and got the money and it's done. Now we've got this iterative process that integrates into the actual chain level growth programs, which kind of shifts the incentive structure a little bit. The other thing is that Sybil detection is hard, right? I call this the Sybil war. It's an ongoing game that never ends. If you create a Sybil mitigation strategy, the Sybils will find a new way around it. As we've seen with WorldCoin directly creates the incentive for like Chechen gangsters to round up homeless people for their eyeballs. You can't win, right? But what we can do is aggregate the data of confidence that each of the individual ZK chains build up with their own users. For example, Gravity KYCs their users because it's a kind of centralized, decentralized hybrid chain. That trust can inherit across other ZK chains. So by taking this data level of approach of looking where are the real users, we can start to aggregate that trust at the ecosystem level, at the elastic chain level. So, for example, see Lawrence here over at so Open, which is an NFT ticketing platform. You can build a pretty high confidence chance that people who are buying tickets and going to gigs are real people. That trust can aggregate across the network. The other things that happens with Sybil attacks, typically people do these point programs and it's a kind of one-shot distribution. If you look at how those things play out, you instantly see where the Sybils are when they pool their wallets and exit from centralized exchanges. So you actually see the Sybils declare themselves when there's a payout moment. So we have these kind of sequential payout moments throughout the year. And with that, we can sort of remove Sybils over time and build up sort of, and trust will aggregate across the network as we go through. There's also many different identity solutions and Sybil defense mechanisms and strategies that can be employed. Big part of what we're going to be doing is aggregating that knowledge at the chain level to give ecosystem teams, app teams, a good sight on who are the real users in the ecosystem, what's the best approach for building Sybil defense strategies on my application. All of this knowledge will be aggregating as a kind of public level infrastructure that teams will be able to tap into. Incentive structures are what make crypto go round. Just because you're in a kind of Sybil war doesn't mean that you should not play the game, right? We just need to get better at it. And that's a big part of what Catalyst is aiming to do. Having said that, it might be possible that participating ZK chains do Sybil their own growth strategies to enhance their own numbers and all that sort of stuff. We'll be looking at potentially, we're quite good at this, we've been studying it for years, but there's also experts out there. We want to get really, really good at understanding what are the Sybil dynamics across the ecosystem. And if we do find teams, apps, maybe even chain level people who are gaming the system, there is a mechanic here, which is effectively like a slashing mechanic. Which is necessary to kind of put the kind of downside pressure on. You don't want to do this because it means you lose your incentives. So we think we've got potentially a groundbreaking approach to managing Sybil here at the entire sort of ZK level, purely through aggregating data and trust across the whole level.
I think another point also to hammer down here is the approach that we've taken with really working in those two waves, right? Like our head is always, okay, we launched it with this first 3 months, capital allocation will be limited. And it's also not just to, be risk averse in terms of value creation, but also to test exactly these dynamics. It won't be perfect from the beginning. We might learn a lot. So we try to kind of keep an open channel and yeah, just share this across the ecosystem. What we thought about, and I think it's a kind of in the making, is a very easy system to communicate that. So thinking about like a traffic light monitoring system somewhere on the website. If that isn't enough, we might want to work with a more sophisticated solution somewhere down the road. But this is then really okay. If we learn that after wave 1, we might reconsider what else we need if we can't build it in-house. Okay, thanks for listening to this speed run. We are aware it was a lot of content in a short time, so I appreciate you being attentive throughout those last 25 minutes. In terms of next steps, so this is really, yeah, as said, right? Still an open platform. We want to listen in. Is there any loopholes still? Are there any big concerns? We will incorporate this today. We'll launch an updated proposal version, the usual process, and then whenever we feel it's right and there are no big outstanding topics anymore, also move this to an on-chain vote when we have a final version.
Okay, just picking up on some of the questions in the chat. Joe, really good questions around is there legal implications? Potentially we could integrate that. There is perhaps one of the highest risk points is if the ZK chains themselves defect on gaming their own system. That's something we could explore as part of onboarding into the process as a kind of part of the partnership. My inclination for all of these things is I'd like to find gaming resistance and Sybil resistance without doxing, right? To build up levels of trust without biometrics, without contracts. It's done through crypto economics and it's done through aggregated trust. So yeah, I would prefer not to. I think it's possible to design systems that are gaming resistant that are purely done through incentives and good game design. That's what we're aiming for in the first instance. If it could get to that if it becomes necessary, but I'm hoping it won't be. Yeah, regarding the VC match, I think it's really interesting because we might have that will extend to Elastic Chain wide chains and potentially at the individual app level. That's a really good point. We'll be able to include apps in this program, even if the whole chain, for example, is not included into Catalyst. Anything you want to pick on, Bernard? Really great questions from Anastasis. Do you want to?
The next one, I think Synca's one, then let's just go, in chronological order.
Yeah.
What does reward flagship apps mean in the context of Catalyst? What is the money we're giving them meant to be used for? So this is slightly now amended with the new mechanisms. We moved from basically allocating funds directly to flagship apps, and flagship apps then would have meant the top runners in each ecosystem, much likely. So ZK chain would have gone and said, okay, there is this mechanism where I can get funds directly to apps. I pick the ones where I see the most value creation, and these are then the flagship apps per ecosystem, hence the name. Now we're obviously kind of piggybacking on the ZK chain growth programs. So the streams are much more democratic, if you will, right? So there won't be those specific bets that get all of the funds and are more limited in size, but will be streamed down through the whole ecosystem of the Elastic Chain, depending on how they design their growth program. So it could be devs, but could also go to users, depending on where the most value creation is per chain.
So sorry for jumping in. Apologies for background noise.
Yeah.
If there's any.
Oh, good.
So we're allocating the capital without necessarily specifying what it's going to be used for by the target app. So it could also be, a bonus for doing a good job and deploying on ZKsync, almost like a bribe when it comes to ZK.
Yeah. So what we will do, so the ZK chains will basically apply with their strategy of their growth program, right? They will highlight, how they want to reward users of devs, why, what are the KPIs they are tracking, and then also how much funds they want to allocate internally, and this most likely their own tokens. These programs we will then assess and see, okay, what of this is aligned with the activity that we want to see across the Elastic Chain ecosystem? How big is the size? Is it aligned with growing user activity? And then get together with them and basically iterate on those allocation mechanisms. This, as you say, will basically leave the ultimate KPI a bit broader, or it's much more aligned with what the ZK chain see value versus we are giving the direction. But it will also provide full incentive alignments because they don't get free money anymore, but they only get a matching allocation for if they allocate funds from a ZK chain perspective. Does that make sense?
Kind of. So someone would apply, like a ZK chain will have a growth strategy, then an app will apply based on the strategy, explaining how they're going to plan on using the money that they receive. You know, X amount could go to incentives for users, X amount could go to marketing campaigns or operational expenses or infrastructure costs or whatever. And then if that is kind of like it's appropriate or accepted by the steering committee, then they just will receive the money based on meeting the KPIs and everything. But they don't necessarily have to, like, they're targeting money for, like Ignite, for example, is specifically for user incentives, right? So Catalyst is kind of like more broad, the way I understand it.
Exactly, but it's not. We're not deciding on an app allocation. We're just deciding on the mechanism. We align on the mechanism with the growth program of the ZK chain. So they present, hey, look, this is what we are gonna, what our growth program will do. It will, reward transactions, a number of transactions. It will reward the devs for certain activity, and then we sign this off. Then they get the allocation to be streamed. So we won't make a decision on an app individual level. We will only make a decision on a ZK chain level. So they let us know this is the growth program, and we say, okay, now you get 5 million tokens to allocate via your growth program.
Yeah, so there's only now the initial allocation, which is much smaller, which is going directly to the apps. Whether we encumber that spend on the apps to specific, like ideally, this is like our primary goal is like to maximize net worth growth. So we would ideally see that money spent on growth of those apps. But this is now much smaller allocation than it once was. Now the majority of the funds are being integrated into these growth plans, so like juice up the growth programs so we'll be integrating with the mechanisms there. So it's very structured. We're not now dropping the majority of the capital is not going to apps to just carte blanche spend themselves. It's much of it potentially might end up as direct user incentives anyway, because that could well be the optimal way to drive the network growth. It depends how the ZK chains are structuring their growth programs.
Okay, good.
Any other questions?
I think the question was answered with that as well. What does a flagship app mean? Will be based on meeting pre-specified KPIs. So it's just the apps that take part in the growth program. This question: are there any consumer VCs already engaged? So we're in initial discussions right now with the first set. These will likely be an overlap of the top consumer VCs and the ZK chain VCs. The allocation will basically sit in a cap minter, so there will be 50 million tokens that are reserved for that VC funding matching. If we see in the end in the program none of the apps is raising from one of the VCs, then the funds will simply be sent back to the treasury. So this is really kind of a risk-free additional mechanism to strengthen the link between VCs and the ecosystem.
So the much of the incentives, our goal is to incentivize ZK chains to prioritize apps. So we want to use the incentives that will have the maximal impact on app growth. So that's both new apps and it's also adoption of apps. So each of the onus will be on the ZK chains themselves to design the approach, the kind of growth approach that they think is best for their context. So this takes us out of the game of like working with apps directly and sort of potentially interfering or getting in the way of ZK chain level strategy. So we see much of the incentives is going to be going out to users, dApps, and sort of chains in that sort of order, I would say. So yeah, this does move the incentive a little bit away from apps applying directly to us, since we want the ZK chains to be in control of their strategy. So largely, yeah, the kind of decision making center, if you like, is the ZK chains themselves and their strategies. So they now basically direct which projects the initial allocation funds go to, and how we best integrate with their structural incentive programs.
The next question on the interest forms. We have 11 signups for those 2 interest forms now, 5 for chains and 6 for apps. The chains, without naming any names, are 4 of the top 5 to 10 largest apps, say 4 out of the 10 largest chains, and then 1 outsider. And then on the app level, there's basically everything in terms of size, I would say, and also in terms of category. So we have gaming, trading, 2 games, trading, infrastructure, and another game.
Yeah, so I think you answered that, Bernard, on the cap minters. Yeah, the VC allocations, it's likely that, or possible that we're explicitly looking for apps who are willing to be exclusive to the Elastic Chain ecosystem. So we're trying to create an incentive game here, where VCs are incentivized by extending the runway of their projects they're investing in, to get them to say, come and set up on a ZK chain, because this is the place to build apps. And if we don't get any hits on that, then the funds are not minted from the minter, and will be returned. Good question on wind down. The project has a scope of 12 months. We're looking to onboard the first wave at month 3, second wave, which is 3 times bigger in allocation, in month 6. If for some reason, like, we're very, very confident that the wave 1 slots, we've got quite a bit of demand for those first wave of slots. And we're pretty confident that in wave 6 that we would be able to onboard the next wave of chains. But if the event happened that when, in month 6, we just don't manage to fill the slots, I think it would definitely be time to review the program. There is these structural wind down moments throughout the point where it's like, look, it's just not working. There is multiple tap out times throughout the program. Good question. I've been thinking about this as well, in terms of, like, when the KPIs are hit, might take some apps, several months, maybe even probably a sensible cutoff point for the project, where if unallocated funds are not hit through KPI-based, performance-based unlocks by month 18, for example, we're in at 12 months, active building and monitoring the program with 6 months extended support and oversight. I would well expect some of the incentive programs to potentially extend beyond the 12 months, maybe the 18-month program. We'd actually be looking to, what we're trying to build here is infrastructure that would allow the DAO to recapitalize this program because it's working. So we'd actually be more ideally be looking at, like, let's put some more money in the pot and rerun this game again if it's working. But the opposite is true also, right? If this is not desirable, it's not working, the DAO can absolutely put the stop by the cap minters. Same with the reporting structure. The goal here is, like, radical transparency. We're trying to build infrastructure that will allow apps and chains to look at what are the apps doing that are winning. What is the best incentive structure approach to generating user growth? The goal here is to create information that the DAO and the wider ecosystem can see. So reporting is a big part of what we're doing. We'll certainly be reporting back to the DAO. We will have monthly payouts, right? There'll be dashboards. There'll be lots of new data for the DAO to review. Lots of new reporting systems, and we'll also give, whenever there's a payout moment, there'll be a report back to the ZK Nation.
Yeah, and the key to kind of manual reporting points on top of basically the dashboard and monthly reviews and so on are in my month 5. We have a midterm report that is more on the extensive side, and then at the end of the program we have an end term review report that we then also will host governance calls and so on with, where we go through the effectiveness, KPIs, value creation, and so on.
Yeah, we see the like we said, the Ignite program is explicitly targeting depth on exchanges, liquidity and depth. This is the social layer version of Ignite, if you like. So we're explicitly targeting different user actions. So we think that, like, what we're trying to do here is create a expansion of the social layer by creating the right mechanisms, incentives for doing it. So I think it's complementary to Ignite, but really quite different and different targets of KPIs.
The main reason to combine this with the ZK chain growth programs is basically the skin in the game element, right? Like, we want to have full incentive alignments with ZK chains, and this is in capital allocation, and then also growth of their specific app ecosystem. The request came from selected ZK chains, but then also iterated a lot with Meta Labs and other delegates, just to see, okay, how can we prevent funds being spent on apps that, you know, are basically one-off and then they are just rewarded for it. We want to have that element of, we collaborate with the ZK chains in building the best growth program that they can, right? So the initial spark would obviously come from them. They will come with a concept and with a strategy. With the layer that we have across the Elastic Chain ecosystem, we hope that we can add value in terms of, okay, how can we make a growth program a success versus just very selectively financing apps?
Yeah, I think the question around, is it going to create double incentives, is a interesting one. It's a catalyst program, so we're trying to, like, maximize the impact of the programs with another, you know, there's another asset in there. It's not necessarily the native network token. We've got ZK in there, so it's enhancing the programs both financially but also operationally. So we're going to be, like, being able to support chains in creating their own growth programs by sharing the practices that are good from across the ecosystem wide. They're all going to need information they're all going to need infrastructure for aggregating chain level data. They're all going to need token distribution infrastructure. They're all going to need to access the cap minters. So there's a level of, like, efficiency that we can find across that, and helping them build good incentive programs. But also we've seen that we've already started working with some of the ZK chains to look how we can add a ZK level nuance to their programs, which promotes interop transactions across the wider Elastic chain. So each of the ZK chains programs are obviously focused on their own chain, growing their own apps. They only care about themselves, and, you know, they shouldn't really care about anything other than that. The goal of Catalyst is to build the kind of ZK-ness and the Elastic chain sort of impact into their programs as well. So we'll, for example, one of our key goals is, can we promote interop transactions across ZK chains? So we can come in with that lens of, like, how do we build the Elastic chain and allowing those ZK chaps to focus on their own ecosystems.
The next one on timing is right now the right timing for this. Also considering the immaturity of many of the ZK chains right now. So what we do believe is that if we wait longer with this, we will lose the market momentum. Right now, we have the first wave that will, after on-chain vote, take 3 months, and we'll work together with the first, you know, less than a handful of programs to basically make a case. Abstract, for example, is a candidate that we talked about already, which is, you know, in terms of maturity of the growth program, just ripe exactly for that matching algorithm. And we hope that we can, you know, work closely together with them to also channel those learnings out to other chains. After those 3 months, if you think about the timeline also, this will be nearly kind of mid-year already. We will hope that we will have, supported other chains in the meantime to set up their growth programs for the summer, basically to be ready. I think it's not our ambition to push chains into a growth program that they're not ready for, but rather as kind of a guiding function for whenever the maturity is there. I think it goes along those lines of those halting mechanisms. If we see the activity is not there, we have the ability to steer it or put a stop or a pause. I think there are many mechanisms that we baked into the program where we just make sure, funds are not being lost. Also, our payouts are attached to that. So I think these are kind of our considerations on timing and making use of the market momentum that we have.
And just having spoke to some of the ZK chains, many of them are coming online this quarter. The ecosystem is really going to look radically different in 6 months' time. Some of them have hundreds of apps, and it's really a little bit more mature than you can see right now. I think as these chains come online, it's actually kind of perfect timing for it. I think we'll have a really high quality batch in the first wave, and by the time we hit 6 months in, I'm very confident that there's going to be more ZK chains than available slots in the program, which will make it competitive and will make it higher value. I think it's a reasonable question around the VC matching and is it a separate proposal? It's largely that we will be working directly. We're building the infrastructure around the cap minters and token distributions, and a big part of this is like we need VC collective intelligence. We need VC decision making in this program. So VCs have kind of the feedback we've had is that that council, it's security focused, it's researcher focused, it's builder focused, but what we need is that intelligence in the program. So a lot of it is about how do we build the VCs into the program so they can inform the decision making around app growth. So it's explicitly there because we want the VCs in, and we'll have the infrastructure to distribute the capital out to teams. So we're building the tech and building the reach that will give us the good insight into that, we think.
On the design decision, if you could clarify what exact design decision you mean, Joe, then we can follow up on that. Next one, isn't the percentage of OPEX excessive? Here, I think what you need to see is basically the breadth and capacity that our parties will spend on the program. So this is not only program design and development of the infrastructure behind it, but it's also the stakeholder management and guiding function with ZK chains, right? Like what we're doing here is not only shipping grants to people and assessing grants like in a traditional program. This is really shaping an ecosystem and smartening everybody up on what growth programs work well, establishing a channel between the ZK chains to set up more growth programs, guiding them, seeing on an aggregate level, learning from the data, where do we have Sybils, how many real users are there, visualizing all of this in a dashboard and so on. So there are very many efforts that come into this OPEX package. And yeah, I don't think it's something out of the ordinary if you consider the deliverables.
Another good question around the council participation. If you have a look at in the sort of very meaty proposal that's up there, we've got sort of plans for where this can go after. We want to broaden the participation on that. I think that's a good point. We are iterating and enhancing on the kind of Ignite design in terms of the structural decision making. I would really like to see much broader participation. Like what we're looking at is also that how do we make this TPP infrastructure that has broader participation? We didn't want to engage in a kind of election process now. It's just going to slow everything down. But in the next iteration, we absolutely want to broaden the participation in the program, maybe even have kind of like user inputs in there as well. So yeah, good question. I think and we should put a pressure on having these structures as participatory as possible. I'm certainly keen on driving that.
And I think, I mean, to me, it's always about alignment with the DAO at this stage, right? What we want to obviously have from the get-go is having a channel established to the token assembly. I think we have, one delegate there as it stands. We will have a lot of interaction points directly with the DAO. To run public elections, I think we're open to it in Wave 2 or so. I think that's nothing out of the ordinary to see if we, equip more seats with people from the token assembly.
Yeah.
On that question of OPEX, one thing that would be really helpful is if you guys could prepare a spreadsheet or model or just something that can take all of the different numbers that's at times quite buried within the text and just bring it out, will make it a bit easier for us to evaluate. Yeah. And while I have the floor as well, I just want to congrats guys, that obviously an absolutely immense amount of work has gone into this. So good job, it's really constructive.
Thank you, Joe. Appreciate that, mate. Yeah, I think I'm actually sort of working on trying to simulate out some how this project might play out. But you're absolutely right. There's a lot in that proposal. I think a collection of all the various numbers into one place will make it a lot more interpretable. I think that's a great shout.
What we won't have, just to also front load this, we won't go to break down X hours. I mean, we have this to an extent already where it makes sense in the proposal. What you need to see also, there needs to be some flexibility, shifting resources across the different work streams. Yeah, happy to take this off also bilaterally and see what makes sense to add on in terms of rates on specific deliverables or so. I think that we can put some thoughts behind it to get more clarity here. I think we can't do it too granularly just in the nature of what this project is in the end.
Yeah, I'm not asking for sort of war and peace on it. Just I was starting to pull out different numbers myself and thought actually it's better to just push that back to you guys and say, can you make it easier for everyone else to interpret?
Yeah, I think it's very sensible. Any final questions, anyone? Please do jump on if you like. Really great discussion so far. I've appreciated it a lot. Put them in the chat or stick your hand up. Otherwise,
and also if something comes up, I mean, our DMs are open in the delegate chat here on the forum. So we'll try to keep an eye out for anything that comes up in a shower thought. Or
forum is the best spot for it. Yeah, do have a reflect on it and feel free to open up any discussion you would like on the forum there.
Awesome. With that, thanks a lot, everyone, for that hour. Landed on it. Thanks a lot for the attention and granular questions. I think much appreciated from our end. You actually spending the time. I know there's a lot of stuff going on in this space, so really, giving us that mind space is largely appreciated. And looking forward to move this forward.
Thanks, guys.
Thanks so much, everyone.
Thanks, everyone.
Bye-bye.